And in this video, we're breaking down 3 key differences and 2 surprising similarities between stocks and cryptocurrencies. Stocks are seen as the reliable backbone of traditional finance, while crypto represents a new frontier, innovative, fast-moving, and full of potential. But despite some notable differences, both can, and some say, should have a place in modern, diversified portfolio. First, let's talk about the assets themselves. And one of the most fundamental differences, what you actually own. When you buy a stock, you're buying a small share of a public company. Its value is usually tied to immeasurable things like revenue, profits, and assets. Analysts build detailed models to project these numbers into the future. But a stock's price isn't only based on today's data. It often reflects the market's belief in future growth. If investors think that a company will grow, the price rises. But the reverse is also true. Even if a company looks strong on paper, its stock can fall if people lose confidence in its future or in the industry overall. Now, crypto is different. You're not owning part of a company. You're owning a digital asset that plays a role in a decentralized network. Both stocks and crypto have value because people want to own them, but the reasons why are very different. In crypto, the first key driver is utility. Take Ether, for example. It's essential to the Ethereum network. Developers and users need it to pay transaction fees, run applications, and interact with smart contracts. Second, there's scarcity, sometimes called tokenomics, and Bitcoin is a classic example. Its supply is capped at 21 million, which is why it's often seen as a digital gold and a long-term store of value. And finally, there's community. In crypto, the strength and passion of the community behind a project can be a major force. You'll see it in stocks too. Think Apple versus Microsoft loyalist. But in crypto, this effect is often a core driver of the asset's value. When a community actively uses, builds on, and advocates for a project, it creates powerful network effects that directly influence its success. And sometimes that belief alone can drive price even more than the underlying tech. Now let's talk about how you actually trade these assets, because this is where the differences directly impact your experience. Stock markets have a long history, going back to the 1600s. Today, most stock trading is digital, but it still runs through centralized exchanges with fixed hours. In the US, that means Monday to Friday, from 9:30 a.m. to 4 p.m. Eastern Time. Crypto, on the other hand, was built for the modern age. Since Bitcoin launched in 2009, crypto has existed entirely online. It's borderless, decentralized, and always on. The crypto market runs 24/7 every day of the year, no opening bell and no closing time. Where and how